Everyone, I want to do a quick video on what fund overlap is. It's very important for when you're investing in the ETF market where you don't want to have too much fund overlap because that creates too much risk because you're basically in the same exact ETFs. So we're going to start with QQQ versus VOO. QQQ is a very heavy growth fund which is technology based. VOO invests in the top S&P 500 market. So you'll see that they share a 52% overlap by weight, which is kind of a lot. So you're not going to really want to have these two together. I can show you a better one if you want to pair QQQ with something else. So if we do QQQ with VTI, which is more of a total stock, you'll see that there's 46% overlap, which is still heavy. Now it's always good to have VTI as opposed to VOO when you're in QQQ because now you're invested in many more companies. Look, instead of 500 companies, you're in over 3,000 more companies. But here is a good choice to pair with QQQ is VWO, which is the emerging markets. Last year in 2025, these performed way better than most ETFs. VWO and other emerging international funds performed like over 20%. And you'll see here that they have a zero overlap by weight, and they only share one holding. So this is great when you want to have diversification and avoid risk when technology goes down because you know QQQ is very, very tumultuous. It goes up and down a lot. So, and then I want to share one more with you. It's going to be SCHD, which is a dividend fund, with that VTI, which was the total stock. You'll see here, this is also a really good pair. So SCHD with VTI is very good for risk. You have a dividend paying fund, which is less growth, and VTI, which will be more growth oriented. You'll see they only have a 6% overlap. So when you're investing in the ETF market, make sure you check out the ETF overlap website. You can use any. I just like to use this one because it's the most clean. Make sure that there's a small percent overlap before you choosing multiple ETFs.